Hi, I'm Jim Gosart. I'm Worldwide Vice President of Republicans Overseas.
And I'm John Richardson, and I'm working with Republicans overseas.
John, I think the topic for today is going to be foreign tax credits. Uh, exactly how does that work? How does that benefit or impact an American living abroad?
Well, let's keep it, relatively simple, okay? As we know, we start from the principle that all American citizens, regardless of where they live in the world, are required to include their income on a U.S. tax return, all income, all sources, etc. So let's say that you have income that is sourced outside the United States. And for example, if you're employed outside the United States, under the U.S. rules, income is sourced to where the work is done. So let's say you have $100,000 of employment income, and that's foreign income, right? So obviously, you're going to put that $100,000 of income on your return. But you know what? It's pretty clear that if you're living in a place like Canada, the UK, Germany, France, frankly, anywhere that has an income tax system, you will have paid tax in that other country where where it was earned to that country, right? So the way it works conceptually is this: step one, the $100,000 goes on the U.S. tax return. Step two, the U.S. tax on that income is calculated, and you owe it. But step three, the way the foreign tax credit rules work is that you're allowed to effectively pay the U.S. tax owed, okay, by using the tax paid to the other country, right? That's why we call it a tax credit. But you're able to take the full amount paid in tax to the other country as a tax credit, which may exceed the amount of U.S. tax actually owing, which leaves the excess in sort of a basket to possibly be carried forward for up to 10 years to offset other U.S. taxes owing, right? Does that make
Yeah,
sense?
so well, it does, but I think it's more complicated than than meets the eye, isn't it? Because when you get a foreign tax credit, it almost sounds as if you're excluded from that tax obligation in the U.S. When in fact you really aren't, are you? You still owe that tax to the U.S.
That is absolutely the case, Jim. Of course, you owe that tax to the U.S. And, you know, I think that these foreign tax credit things are not very accurately described because people say, well, we're gonna use a foreign tax credit, so no U.S. tax is owing. No, no, that's incorrect. You use the foreign tax credit to pay the U.S. tax. So the foreign tax credit is used so that you have paid the U.S. tax effectively and no further U.S. tax is payable. But that's a completely different thing from somehow being exempt from U.S. tax.
It is, and John,
By the way, Jim, the rules on this, I'm giving a very simple version. The rules on this are enormously complex, and it's not like you take all foreign income, put it in a basket. You have to break different kinds of income down into different brackets, okay, into categories. So let's say salary income is one, investment income is another, right? But the value of this and why I think most Americans abroad are far better off using foreign tax credits instead of the foreign earned income exclusion that we talked about previously is precisely because they have the opportunity to build up future tax credits for future use.
yeah, exactly. Yeah, and I think a lot of Americans have experienced that. You do build even after you would say you're with a corporation, you're living overseas for 2 or 3 years, then those foreign tax credits can carry forward even after you to benefit you a little bit, even after you move back to the U.S. But still, the complexity of it, the fact that you are still effectively double taxed, John. It's why we in Republicans overseas feel the only solution to this issue in any future tax reform that's done really should include the full elimination of citizenship-based taxation, separate citizenship from tax residency. That's why we stand where we stand on this issue.
And that's precisely why Republicans should stand where it does on this issue. I mean, you put it very well, Jim, that what I described was an example of double taxation. No question about
Right.
it. It's just that you use the tax paid in the other country to pay the U.S. tax. And that's how
Right.
this has
Right.
got to be understood.
Well, thanks, John, as always, for your expertise, and thanks, everybody.
Thank you.